This is the Domain Magnate Show, where you'll learn everything you need to know about buying, optimizing, and selling online businesses with your host, Michael Beroslavsky.
Hello, dear listeners. Welcome to another episode of the Domain Magnate Show. Today we have Eric Owens from appbusinessbrokers.com. Hi, Eric. How are you?
Doing great. Thanks for having me on, Michael.
Thanks for joining. So tell us a little about yourself. How long have you been in this space, and what services do you provide to clients?
Yeah, definitely. So we've been brokering the sale of internet businesses for about 15 years, and then mobile apps the last, I think it's 8 years now, 8 or 9 years. We got into that about a year and a half after the App Store started. And then these days we mostly work with seller clients and work with them all the way through the process. So, from valuation to closing and transition, and then focus on apps and internet businesses like e-com, Amazon, software as a service type of stuff.
If you had to guess, like, how much did you sell in value businesses? Like, what would you say was the total number, more or less?
I think the last time we checked, it was around 46 million. Might be up over 50 now. Haven't tallied it up in a while, but
that's pretty good. So about $46 million in sales. And during what time frame, what period?
I think we've been tracking that the last probably 7 years. Yeah, good question.
Nice. And I understand that you mostly focus on buying and selling apps. And so what is the difference in terms of brokering and selling between apps and traditional businesses or websites?
Sure. Yeah. One of the big differences with apps is there's less ways you can market apps. There's less less things you can do with them. On the flip side, some things you can sometimes get the natural lift of just more people using apps, like they have been during this pandemic, where they can go up kind of on their own more easily than internet businesses. And then on the those are really the big things that I always like to kind of coach buyers on. So,
and how is it different in terms of how the transaction goes with transferring the app, transferring the ownership and the assets that are included when you compare it to an online business like a commerce store?
Right. Yeah, it used to be pretty onerous where Apple, to do transfer an app, Apple made the buyer buy the whole company entity because they own the whole developer account.
Wow.
Then years ago, they changed it where you can now at least transfer apps. That's one nice thing about apps compared to internet businesses. When it comes to the transfer process, it's pretty simple. Same thing with due diligence, where there's not much really you can do for due diligence besides verifying the revenue on Apple or Google or ad networks, and then user base numbers in the code. So nice thing on the transfer stuff is it's literally push a button and it transfers the app over to the new owner and shows up in within hours, or at least a day at most, and then it's done.
So that's pretty straightforward. So it sounds very similar to basically how you would transfer a website.
Yeah.
And with platforms like Google Play, iTunes, like all these different Play stores, do they all allow simple transfer these days?
They do. Apple has a couple strange technical requirements where if people have used there's something called iCloud and another little piece of code in there that makes the app non-transferable. So we always work with seller clients up front and make sure they haven't used that code in their app so they can actually transfer them. But
so
Google's very easy. So.
What's the biggest deal that you've closed?
I think ever is 10 million. It was a combination of a software as a service and an app. And I worked on $100 million deal before, but that was an offline business for a circuit board factory. So much different than internet businesses.
Yeah, so the 10 million business, that's pretty impressive. How was the process going? How long did it take?
That one I think took us about 6 months to get the deal closed out. The buyer was using they're a small private company or a small public company. I mean, so they had some extra requirements on the SEC side of things and reporting, and And then the part of it too was the owner had like a video studio that they used for some stuff. And so doing actual physical transfer of the studio was a little bit different than most internet businesses.
Wow. And what type of assets were included? Like, was it mostly online? Was it like an e-commerce store?
It was mostly online. Yeah, saw the software part of it. The software as a service was a key component. Just the owner did like some marketing stuff where he had like this high-end video studio that the public company wanted to continue to use for their marketing stuff as well. So.
And did they do just a one-time 10 million payout, or was it spread out between certain time
Yeah,
period?
it was a blended deal. So it's part cash and part earn out and part stock. And we kind of, some sellers aren't cool with that. This guy was, because he wanted to keep being involved in the business, just not running the day-to-day stuff. So it kind of worked out well in terms of fit.
So was it a company sale, not just the asset sale?
Right. Yeah, they bought the whole company. Yeah.
Makes sense. That's very interesting. And did it
Yeah,
take
some of those small public companies do that just for like it helps them on their whole stock price too when they do things that way.
Yeah. So it took 6 months to close the deal, but how long did it take before that to find the buyer?
Yeah, I think that was in the whole process. So it took probably 2-3 months to find the buyer, and then the closing process, it was around 3 months with them.
That sounds quite fast. That's quite impressive. Nice. And what would you say was your most interesting or most memorable deal that you've ever done?
Yeah, it's a good question. It was probably the first deal that I ever did. And that was how I got into brokering. Was never like intended to be a business broker. Started off doing, thought I wanted to own a manufacturing company. And so I went into engineering school, did manufacturing stuff for a while. And then I realized that I did not want to be in that business. That was back like 97 to 2002. And started looking at other ways to do business. And that's when the internet was kind of first getting going. And started an internet marketing publishing company with a couple of partners. And me and one of the guys created a couple small tax software sites, just this little small piece of software that helps small businesses. And then we had that going for a couple of years. I mean, it was pretty small. I mean, it made like 30 to 40 grand a year in profit. And but he wanted to buy a new Mercedes and I wanted to buy a house. So we were looking around like, what assets do we have that we could do this with? And they're like, well, we don't really do much with these sites, so we could just see if we could sell them. Back then, I didn't even know if it was possible or not. So we just went through and figured it out as we went, like, using the couple of listing sites that were around at the time. And then we took a different strategy too on that, where we actually reached out to our customer base for that to say like, hey, does anyone have internet marketing experience and would want to own their own business? And so one of the guys off our list ended up buying it in the end. And then the interesting part for me was open my eyes, because I realized like me and my partner on that made more money, in that month when we sold it than we had in like a year before. So really opened my eyes to the power of selling a business in general.
Yeah, that's really interesting. That's also very similar to my story, how I got into buying and selling businesses. Like the first deals are always most memorable. I remember the first time I sold a site was a relatively small sale, like $2,500, but it was a small site that I just acquired and it wasn't making that much money. So I was just thinking that it's probably going to be a bit of a loss. And then suddenly this gambling company just contacted me and they wanted to buy it. And they offered a good amount. So we negotiated a little bit and I sold it. And I remembered that I paid about $100 to that site initially. That was probably back in maybe 2006, 2007. Yeah, and that was the first time that I realized that it's really profitable to sell sites. Like I bought it for like $100 or $120 and sold it for $2,500. And then the next one was also my first six-figure deal. That was quite memorable because it also was quite a long process. So it took many months to settle, to complete. and it's one of the more exciting ones as well. I think that's kind of how it is. The first time is the most memorable, right?
Right. Yeah. Definitely.
And what do you think about the current economic climate? How does it benefit buyers or sellers? Like, is it good time to buy or is it good time to sell now?
Yeah, I think it's definitely, from what I've seen, it's a good time to buy. And we've actually had like when the whole pandemic stuff first started, we had some deals in motion that got paused just because buyers were scared. And then maybe the last month or so, we've had more and more buyers inquiring about both apps and internet businesses. I think I think people have seen that the value in digital businesses in whatever form, online businesses or digital assets is strong. Where people might have been looking at maybe buying an offline business before, then now we're looking at buying online businesses. So hopefully the trend for that continues, where like over time it'll increase the value for internet business owners and app business owners. On the sell side, I think things have been coming back now, where we've gotten deals back in motion and some stuff with like even bank financing, where at least here in the United States, when the whole stuff first hit, the banks were not loaning out money because they were so busy dealing with the current climate of it. So like we listed one business rate about when this stuff was going to hit, just because the seller was very motivated to sell, because he has like a little 6-month-old daughter that he wanted to spend more time with. So he was kind of like, oh, let's just give it a shot and see what happens. And the business has been growing. That business has grown more when we've had it listed in the last 2 months than I've ever seen any other business, where it went from like 150 grand a month in profit, 150,000 a month in profit, sorry, to 500,000 in April, and then May should be like around 800,000 in profit.
Wow.
So we just got a deal signed on that on Monday. So.
And what's the average multiple that you are seeing currently for apps or for other businesses from your experience?
Yeah, apps, they definitely can go anywhere from like 1.5 times to around 3 times the yearly profit. Most of them are very high margin unless someone's doing a lot of paid user acquisition for it. So they tend to be like a little bit closer to multiples of revenue than we see for internet businesses. So those ones have been doing well. Subscription apps, certainly, because they have recurring revenue, sometimes we can get, those are the ones that tend to be closer to 3 times. And the lower end are ones where they've gone in decline. So you get that sometimes with apps where sellers launch them and then don't know what to do to market them ongoing, so they definitely decline. And then internet businesses, I think right now we've been seeing anywhere from like 2 to more like 3.5 times on those, on at least the ones that are growing. But.
And who are most of your buyers these days in those ranges? Would it be funds or individuals or some groups or public companies?
Yeah, for apps, it tends to be, there's a couple, or at least our favorite buyers to work with have been, there's a couple of like small investor groups and even a couple of individuals with teams where like they just buy apps all the time. Like they buy multiple apps and then figure out ways to better monetize them. So they're almost like small investor groups. We like them just because they're very experienced and they can usually make like cash offers and close quickly. We do some app deals though with large public companies, like there's one IAC in Apollon who owns like Tinder and Match.com and a ton of stuff, where they bought some apps through us before. And then on the internet side of things, those tend to be either individuals or like some private equity groups. And like you said, there's definitely some investor groups now that have popped up that specialize in internet businesses, even some that are doing like only Amazon business deals and stuff like that.
So are you seeing many repeat buyers? And what do they usually do? What kind of strategies do they have to run to monetize those apps and businesses better?
Yeah, so on the apps front, they usually their strategy is they look at the user base and the revenue, and then see where they can get an ROI. So some of them have better ways to monetize the app than the current owner does, where sometimes with apps, the owners will just like, they'll use the freemium model. So they'll make the app free and then make money off of advertising, where these buyers will look at it and see how they can turn it into more in-app purchase revenue, or even turn it into a subscription app. We've had some people do that really well, especially in like the photo video editing market, where they'll buy like an app that's been free and turn it into a subscription app, and get a really strong ROI on that. On the internet front, the repeat buyers we have there, usually they're getting some kind of leverage just from efficiency with operating multiple sites. Like they'll look for niches where maybe they're targeting the same demographic, and then they can cross promote products from a couple different small online brands to those customer bases.
Yeah, this is also similar to what we are doing at Domain Magnate with our acquisitions, trying to reach some efficiencies by having multiple assets, multiple sites in the same niche, and then we can negotiate better deals with affiliate companies, with products, and we can manage them better, do content and SEO better at lower rates. So I guess that's similar with apps as well, and the commerce sites, right?
Yeah, definitely.
Mm.
Yeah, e-commerce too. We see some buyers there where like if they're doing any kind of like if they have physical products and they're doing any kind of stuff, we find most sellers get them to a certain level where they start to get uncomfortable about doing larger inventory purchases. Where it's a big difference between buying like $50,000 of inventory and $500,000. But some of the buyers who buy them, like you said, they have experience negotiating better deals and getting better terms, and even financing inventory purchases, just stuff that smaller sellers don't know how to do.
And when it comes to apps, so one strategy you mentioned is you could buy like freemium apps or premium apps with a one-time cost per user, and then turn them into a subscription model, or introduce some in-app purchases. Is that like the most common tactic, or what are some other things you can do to have more efficiency, better management?
Yeah, and some of the guys that do well with those apps too, they figure out how they can cross promote apps, and with their traffic too, some of them can go to some non-traditional advertisers besides like the Google AdMob type of stuff, and get better advertising rates at like a bare minimum. That's what they usually do, look for that leverage.
Can you really get like a substantial improvement with AdMob, because they're pretty big?
Yeah, now with them, I mean, using going with other advertising sources besides them. Yeah, it's
okay. And then would there be some advantages to having multiple apps? Would people buy apps in the same category, or just different apps, and cross promote them or manage better?
Yeah, exactly, the cross promotion stuff, and then usually too they have some development team, even if it's outsourced, where they might have a better team that can go and update those apps and improve them much faster than a smaller current owner can.
Yeah, so you mentioned that the costs are usually not very high, that the margins are very high. So does it mean that the development costs are not that high for those apps? Because I know that app developers are usually quite expensive.
Yeah, usually there's most of them I think have the front end sunk costs of the initial development, and then after that it's mostly updates, where they're not doing like investing a ton of money on the update side, but there's definitely the upfront cost.
And I've noticed many apps that come across our desk are often apps that are on a decline. So there seems to be kind of like they go up and then they go down. And I wonder if that's pretty common, or are there a lot of apps that just stay stable?
Yeah, I think most of them do go up and then have some of them are very sharp, like hockey stick effect over time, where they go down rapidly. I think those tend to be games that we see that with.
Yeah.
Some of the other stuff like utility apps and and even the more like subscription-based apps, those ones don't have that same effect.
Yeah, we looked at some game apps, and it's kind of hard to tell. Like, how can you actually understand if it's going to be stable, if it's something you can fix, or if it's just going to drop rapidly?
Yeah, I always advise our app buyers, if they're new to it, that they should definitely have a strategy in place of exactly what they're going to do to maintain or grow the user base. Because that's often what happens, where they get an initial burst and then people just stop using it if it doesn't have ongoing value for them.
Absolutely. And do you see many first-time buyers buying apps or other businesses from you?
Yeah, we do on the lower end for sure. Where some people, usually the people that have like some kind of software experience, or at least are comfortable with working with outsourced developers, where that's not like totally new to them. So they've probably had some experience, in some other business or industry, and then they look at apps as kind of like a nice little cash flow lifestyle business, and which they can be for that for sure. Truly low requirements on owner time for it. On the internet side of things, the smaller deals are usually where we see it's more first-time buyers, where same thing, they're looking for a lifestyle kind of business.
What kind of price range would that be for where first-time buyers mostly buy it?
Yeah, I think usually under like 250,000. Some of them do larger deals. Like we have one in motion right now for actually a much larger deal, like 2.5 million, with some first-time buyers. But it's two partners who they do have past business experience. So yeah, it's their first time buying a business, but they have some experience at least.
And are they using loans? Are they using SBA or something else?
Yeah, exactly. Yep. Yeah, SBA loans.
So is that quite common? Like, do you see a lot of those buyers with the loans?
Yeah, definitely nowadays. That's been one interesting trend in the whole internet business space in general, but certainly for us doing deals and brokering, where how long it's been now, certainly the last couple of years, there's way more sources for people to get bank loans now, which is pretty cool to see. Like makes it more of a real industry.
Yeah, but I understand there are some strict requirements, like it has to be a US-based business and a bunch of other things. Is that right?
Yeah, definitely. For the FBA loans, we're seeing some other lenders too now that will do deals. They're usually not as good of terms as the SBA stuff. I mean, those can be really insanely great terms for buyers. Where it's like payback over 10 years at some low interest rates can turn out to be a pretty good investment. What
kind of businesses can people buy there? They can get a really good terms on a loan.
We even did one just back right before the pandemic hit. It was an app deal, subscription app that does video editing, where the buyer got an SBA loan for that one, which was the first time we've had a buyer do SBA for apps. So that was that was an interesting experience. So where that guy now, like he got a loan, so where I think the loan terms are like $10,000 a month, and the business makes like $40,000 a month, very passively. So some good leverage for him. Yeah, it's smart use of debt for sure.
How much equity did he have to put initially?
For that one, he only had to do 10% down. Okay. I think the SBA stuff, we've seen it vary a little bit depending on the deal and the buyer, but in the past, some of them were like even 5%, but I think 10% seems to be the average.
And so what would be the criteria for the SBA loan? Do they have to have a certain number of, like maybe 3 years of returns, like that?
Yeah, ideally, that's what they've been looking for, is the 3 years of tax returns, and then that the current business is at least flat, like not in any rapid decline at least. It could be month-to-month fluctuations, but an overall trend that points to being flat or growing.
And are you seeing many funds, like private equity funds, maybe micro private equity funds that focus on smaller deals, coming and looking for deals and buying these days as well?
Yeah, definitely. And it seems like there's been a couple that where they're focusing on some particular niche or type of business. So there's some that are just doing Amazon or even like Amazon FBA deals for like that's what they're specializing in, and then some with e-commerce or even software as a service.
Hmm.
And then of course you guys with more content sites, but
Yeah, so with the pandemic, it's interesting how the market is changing. So you mentioned that you are actually seeing more buyers now rather than sellers. Are you seeing like the market shifting from a seller market to a buyer market, or what do you think?
yeah, I think right now in the short term, there'll definitely still be some good opportunities for buyers where they can find good deals. Sellers that just decided they want to get out of their business, during the pandemic. Uh, I think over time here that we're going to see more and more buyers that might get more competitive even to buy some internet businesses, just with more people focusing on those compared to offline businesses.
Yeah, that's also my expectation that the financial crisis is just going to cause people to have to go and sell faster and maybe at a lower price.
Yeah, we've seen some sellers too, where like during this they kind of maybe they did some introspection and decided that their current business isn't what they really want to do, so they're going to sell it and move on to something different.
So do you expect that the multiples might go down in the next year or so?
I don't know. I guess I'm optimistic that they'll go up
Why is
if there's
that?
more buyer demand. More people looking. I think in the short term, it's definitely been down. We had some sellers that were looking at selling that decided to just hold off on it because they expected that they either wouldn't find a buyer in the short term, or that they would get offers that were from buyers that were looking for a deal, so that they want to get the price that they wanted.
Yeah, that's true. I guess the really interesting thing about the pandemic is that people are understanding offline businesses are actually also quite risky. Like you could, if you have an offline store and something like that happens and suddenly you just don't have any business. So like people are actually, looking to get more into remote businesses that are more international and not as fixed in location as well. So I think that's great for the industry.
Yeah,
Overall.
definitely. Right. Yeah, I feel bad for the offline businesses, but definitely over long term, it will be good.
So do you have some advice for people about what not to do, or any like cases of something that didn't go as well as planned with the deals on buying and selling sites?
Yeah, definitely. I mean, you probably see this also, but we get some sellers coming to us where they wait until their business is in like some almost rapid decline, or at least some steady decline, where then they even if we can sell it, they get way less value for it than they would have if they had at least maintained it or sold it when it was flat or growing. Where there's just like something about it where there's so many entrepreneurs wait until it's gotten to that point, and then they don't want to put the time into resurrecting it. But then when buyers look at it, even smart buyers look at some of those and go, in the back of their mind, they're thinking, am I catching a falling knife and I just don't see it? Like, so they'll see it as more risky and make offers that are way lower, or offers with less cash and more earnout based. That's been the biggest thing. And then the other thing is not keeping good financial records, where I think almost every entrepreneur, when they're first starting out, like it's just not fun to do bookkeeping stuff. It's just not what you want to focus on. And then some people over time don't get their financials in a good order, where then when they go to sell it, like they limit what they can get done in terms of valuations, because the banker or buyers might not be able to use bank financing if it's not clean financials and clean tax returns and stuff like that. Where it's I think if entrepreneurs, especially online ones, can look at their business really as an asset, and then keep that mindset as they're building it, it can motivate them more to put time and resources into stuff like that that might not have the immediate payoff, but when they go to sell, it makes a big difference.
Yeah, we are seeing some very, very similar things as well, especially on the low end of the market. Many people kind of sell at the wrong time. They sell at that lower end of the cycle, then the business is going down, and then they lose motivation to manage it, to grow it. And I usually advise people also that you have to sell that when you are kind of at the peak. But that's also difficult psychologically, right? Because when the business is going well, everyone wants to keep it and grow it, and people are excited about it. But then it's going down, they want to sell, but then no one wants to buy.
Yeah.
And that's the constant dilemma, buying and selling.
Yeah.
And with the numbers, definitely as well, especially on the low end, like below 50,000, we see a lot of people that come and they just don't have proper numbers. We don't have any financials, and like it's really difficult to confirm things, and it's taking a lot of effort and time to also verify stuff. So there is definitely a huge advantage to just keeping proper numbers early on.
Yeah, I think as the industry keeps kind of growing up and being more sophisticated too, that it'll become even more and more of an expectation where, yeah, a seller can set themselves apart by having clean financials and records, and compared to other businesses.
And do you often work with sellers that have multiple assets, or sellers that start businesses and then sell them, or is it mostly people that just have like one big business they've run for a while?
Yeah, we do have quite a few clients who are definitely fall into the serial entrepreneur category, where, yeah, like oftentimes they're selling their current business so they can self-fund their next big idea, or it's just part of their strategy where they start or buy something and run it for 2 or 3 years and then sell it off. So.
Yeah. Are there any interesting trends you're noticing? Something that's emerging maybe in the past year or so in apps? Specifically?
Really the subscription app aspect, where more and more of our app seller clients, they've sold off their past apps and now focused on subscription-based apps. And the interesting thing with those is where it almost becomes more like a software as a service business that's just delivered through an app, where they can do more paid user acquisition if they know their numbers. If they know that they're probably going to make $100 from the user versus like $5 from advertising or some unknown amount, then they can invest in more user acquisition and do more things with it.
Yeah, Eric, and what do you think about the industry in general? Lately there is quite a big amount of new players coming in as well. There are many brokers now. There are multiple marketplaces for people to sell the apps and businesses. What are your thoughts on how it's developing in the past years and how it might look in the future?
Yeah, definitely. I think that will probably see some more people start to specialize. We might have some brokers that focus on, like we kind of focused on apps and branded ourselves that way, even though we still do internet business deals. We just took that stance years ago, but I think you probably see more people do that kind of thing, where maybe they'll specialize in software as a service deals, or specialize in certain deal sizes, as opposed to in the past. I think most of us early day internet brokers were probably opportunistic, or like, okay, there's a seller that wants to sell, we'll list it. So I think it'd be more specialized in, have some brokers that just focus on those particular niches. Yeah,
that's what we are seeing as well. With deal flow brokerage, we are looking to specialize more in the higher ranges, and kind of picking things that we are really good at selling rather than going and competing in everything.
Yeah, some of those larger deals can be more fun to work on too, where it's just I think partly it's just the buyers are more sophisticated. So like I remember last year we listed 2 businesses at the same time. One was for 2 million and one was for 200,000. We got the $2 million one closed faster than the $200,000 one, and with like way less questions. It was almost less effort for that business than for the $200,000 one.
Yeah, it's interesting.
Just those buyers tend to know exactly what they're looking for, ask very specific questions, and it's either a fit or not. And if it's a fit, they'll make a fast decision and move on it.
And are you competing with Empire Flippers, F International, and similar, who are kind of targeting a wider range of prices and deals?
Yeah, to some degree, although I think we're going to probably specialize even more. We've been going in the direction of focusing more on larger deals and a smaller number of clients that we can work with more directly. Maybe even work with them for like a couple of months before they list to help fix up the business a little bit, and so they can get better value out of it. So I think for us, we'll probably go more in the direction of like smaller M&A type of strategy and certain deal sizes. So
do you guys also do some advising if people just want due diligence service or M&A advice without the brokering?
yeah, definitely. Yeah, we worked with some clients on that front. Some on the buy side too. We did some buy side consulting, mostly for people that are looking to do multiple acquisition kind of strategy.
Yeah, have you guys ever worked with Flipper?
You know, I kind of like avoided it for many years just because we tried using it early on, and it was always like just dealing with buyers who didn't end up doing anything compared to other marketplaces and listing sites. We've started using them again and testing it out and working with them. So definitely seems like there's some more sophisticated buyers there now than there was years ago.
Yeah, it's interesting. We've recorded an interview with Blake Hutchison, the CEO of Flipper, last year, and we just recently recorded another one a few weeks ago. And I'm definitely seeing that Flipper is improving. It still seems like it's mostly oriented towards the low end of the market, but I see a lot of effort on their side to put in good systems to filter buyers. We also get a lot of messages for our listings, both on Domain Magnate, where we sell our own sites, and for deal flow brokerage, that we broker businesses. Like, there is a lot of messages from people that just don't look like serious buyers. You know, it's like maybe 90% just people looking to do some research, ask some stupid questions. People that certainly do not have the kind of budget. And that can be frustrating.
Yep, definitely. Yeah, it's probably one of the few annoying things about this business.
Yeah, how do you do that in your own business? Like, where do most buyers come to you? Do you just work with a small number of existing buyers, or send it to your list?
Yeah, so we our methods for that are we definitely have email it out to our database, and we'll list it on our website, which it gets some traffic. We're looking to start to do some more social media stuff, and then we do use a whole select group of the business for sale listing sites, some of which work pretty well, that bring in good quality buyers, other ones not so much. But our database is definitely the main place that we focus on. And then some listings now too, we've started doing some like direct outreach to potential buyers, which we hadn't done much of in the past. For certain businesses, it can make sense to do that. Yeah, not all of them make sense, but
yeah, we do it as well. It makes sense where there is a potential for some strategic buy, right?
Yeah, I think in terms of like the buyers, the more tire kicker or looky-loo buyers, I think working on the larger deals tends to minimize that too, just because they, if you ask someone for financial verification on a deal that's going to be $2 million, ask them how they're going to fund it. That can screen people out very quickly.
How do you usually do the financial verifications? What kind of
some of the larger deals will ask them even for like some kind of proof of funds. Some of them are private equity groups where they're just able to show that they have capital and backing and investors to do it. And then smaller individual buyers are usually okay with that. If they're trying to reach for a larger deal, they'll explain their strategy for it. It's pretty typical too from like the offline business brokering world, where some of them are like very strict on that kind of stuff, where they need a whole financial statement from buyers before they'll even let them look at the business.
Yeah, absolutely. That's definitely something that's essential. With deal flow brokerage as well, we do a lot of KYC. And what are your thoughts on how the industry might evolve? Like, I think there is a good chance we'll see some kind of process of integration there. maybe one of the perhaps Empire Flippers or someone else will just become too big and sort of dominate the market, at least on the low end. On the high end, it's kind of hard to predict.
Right. Yeah, it's probably a good prediction on that. Yeah, I don't remember. I can't remember if anybody in our space has even bought out other brokerages. I think FE International did it a while ago. Yeah, you might see more of that, even if it's not like a straight purchase. You might see more like mergers, like people teaming up together to combine resources and to be able to compete in some way.
Yeah, I think they there are currently several that are more or less similar size. So I think maybe if there is a big investor coming into the space and investing in one of them or buying one of them, and then that have the capital to go and buy up the others. So we had a discussion with Matt Berry, the owner of freelancer.com and escrow.com, and that's how he described his basically his business model. That he initially started freelancer.com, and it was quite fragmented at the time. Like there were many different freelance portals, and none of them were really big enough. And he just got pretty good at doing it and started buying up the smaller ones. And eventually he bought like close to 20 of them. And now there is just two players. Like there is only Freelancer and Upwork.
Yeah.
Yeah.
So yeah, it could very well happen in the brokering industry.
So maybe something similar. Yeah.
Right.
All right. So what are some general tips that you would recommend sellers, people looking for, like figuring out how to go and sell their business?
Yeah, definitely. I think one of the key things we talked about before was the clean financials. Like that's very important. And then some of the more sophisticated buyers we've seen over the last like year or two, they definitely look for ways that the business is defensible or has like some unique advantage over other competitors in the marketplace. So there's certainly value in stuff like trademarking business and products. And then also if there's ways on the marketing side that you can get things in place where you can set yourself apart from the competition. Patents, certainly not every business, there's not necessarily something you can patent with it, but we've seen a couple where like they have had patents, like even if they're kind of loose patents, that it helps on defensibility, at least adds some value. And then certainly those type of buyers, and I'm thinking more along the lines of like someone that's looking to sell for a higher multiple or ultimately do a bigger deal, where those kind of things are really important. And then having a team of people in place to run the business, some kind of processes in place where new owner can take it over and run it, ideally without the current owner being there. It's definitely important.
And so when people come to you who want to sell their business but don't have some of these things in place yet, like processes and proper financials, would you often recommend them to just wait and set it all up maybe over 6 or 12 months, or just list it immediately and then see what happens?
Yeah, so we usually do some work with them to figure out like it depends on their motivation. Like some of them definitely, if they want to maximize the value, then definitely would take the latter approach with them. Some of them are just so burned out that they're never going to do that, and they know they're not going to, and we know it's not going to happen. So those scenarios, we're usually like, yeah, just sell it and list it now, and they just know, we know, and they know that they're not going to get the same value that they would if they improved it. But
how big of a difference do you think this is compared? Like all those things that you've mentioned, like having proper financials and having it all structured, would it be like a 10% difference potentially on average or something much higher?
I think higher, especially on like the more medium to larger size deals. Small deal, if it's a $50,000 deal, there's probably not a lot of multiplication you can end up doing there. But we've seen some, like we sold a pet supplement business last year around this time, where I knew the owners. We had sold a different business for them a couple years before that, and so they had gone through the process before, and they knew it was involved. Like the first business we sold for them was like almost one of those as-is scenarios that, yeah, I think we sold it for just around a 2x multiple, and it was a smaller deal that was around, I think, 200,000. So they kind of learned those lessons and implemented them for the next one, and we spent some time where they track their growth like every month, and they're like, okay, it looks like this trend's going to continue, so let's push the button and sell now. Where they had originally looked at selling it probably, I think, 6 months before that, and we looked at a few things where we're like, well, if you just improve your numbers and then add like a recurring revenue product, you're going to increase the value quite a bit. So we kind of took that. We're like, we figured we probably would have sold it at the time for around like 1.2 million, and then instead it ended up selling for 1.5 million. So I mean, that would have been, I guess, a 20% increase, somewhere around there.
Very good. And so do you often have some disagreements, some things that just don't add up between buyer and seller? Then, you know, when you have the deal close to getting closed, but there is some drama happening.
Yes. Yeah, definitely. It seems like it's sometimes it's a roller coaster. Some deals are quick and easy. Other ones, for whatever reason, it might just be the certain seller or buyer where it ends up being an emotional roller coaster for them.
Yeah.
Yeah, I think, and I think some of it too is sometimes when they have certain attorneys involved that, you know, throw things in the mix that don't need to be involved, that can definitely, you know, make that a tougher process than normal. We just had one recently where it was like the seller and buyer, like, they actually are very great fit, like personally love each other and want to work with each other. And then when it came down to like this final thing for consulting agreement, it was tougher to negotiate the consulting agreement than it was to negotiate the deal. And this is like on a $2.5 million deal where, you know, consulting agreement's probably worth 200,000. Like, but that was that was tougher to do than the actual deal value part of it. So
yeah, it can be a really stressful decision to sell your business, and especially at the last, this last moment, then when you're close to signing, and then all these potential regrets come in, like, and you know, second thoughts. Maybe you should just keep it, right?
yeah, I think the sellers is definitely sometimes more emotionally attached to a business than they realize, because it's like it becomes part of their identity almost. Like, you know, it's who they are as the owner or that runs that business. So they might not think about that when they first start selling it, but as it gets closer to that final decision point, definitely those things can come up.
So what can you recommend a seller? So what do you do yourself to keep yourself from getting involved in the drama and keep calm during closing the negotiations?
Yeah, I know definitely for me, I rely on meditation, which I've been doing for years. I know you do now also, where it can make such a big difference, where if you are able to, you know, difference between calmly negotiating and emotionally negotiating, where, you know, when you're more calm on that stuff, you can see both sides and see where there might be a fit versus just getting all emotional about it. And so that's definitely one thing that I fall back on, is doing meditation, and that helps out big time.
Yeah, absolutely. For me as well. I remember that first 6-figure deal back maybe 10 years or more, and it was so emotional. It took several months, and it started with me basically selling a small site for like $3,000 to a buyer on Flipper, and then he had some problems, so I helped him with that, and I introduced him to some people to do some content, to do some other things. And he was pretty impressed with. I was actually responding to him consistently, despite not getting paid. So he asked if I have more sites to sell, and I said, okay, well, how much do you want to spend, or what kind of sites do you want to buy? He said, well, maybe I can buy all your sites. And that actually sort of happened in the end. I Now we've been negotiating for a few months after that, and I ended up selling most of my sites. And the whole process was really slow. Like we would be sending an email and receiving an email 1 or 2 days later, and then again I would send another email, and that was the negotiating. We didn't have calls or anything like that, or no chats, and it was really really stressful. I was not sleeping very well during the entire process of a few months, and that was just the beginning. Like as soon as we closed it and we had an agreement, and we started escrow, and we started transferring the website, started the inspection period, then suddenly a big Google update happened, big Google algorithm update, and some of the sites lost traffic. And we had to basically renegotiate the whole thing, and the deal was falling apart. Then I was already like really close to getting the money and just finally taking some rest. It all just started to unfold, and that was one of the most stressful periods of my life. So I really realized after that it's just not like, if I wanted to be doing deals, I cannot go through that much stress every time. And like things like that also brought me to meditation, and as well as doing many deals, it gives you the perspective. And
definitely, that kind of
and you
that
probably
level of stress
noticed
is
that.
definitely.
Probably noticed that too, if buyers, if sellers, like people that maybe it's a first deal might be a bit more stressed with compared to people who are more experienced, right?
Yes. Yeah, definitely.
Yeah.
And that level of stress, like you were just talking about, certainly not healthy for you, for anyone long term. Like it affects people more than we realize at the time. And
after that sale, after it finally closed, I decided that I just needed to take a vacation for like a few months to stay away from business, and then later I got back to it, but and started some new things, but it definitely was too stressful. But I'm glad to have found some better methods to manage that stress. And so, do you have some final thoughts or advice or any other things you want to share with our listeners before we finish?
One thing I know I've had some sellers say is ideally when you are selling, like have some plan of what you're going to do next, even if it's to take some time off, like if you don't know your next move, but have some kind of plan, just because you kind of experience that emotional kind of letdown of like, hey, I sold my business, but now like, who am I? What am I going to do in my life? So that can affect some people more than others, where if you have like a plan of what you're going to do next, then you can avoid those kind of things. But
yeah, that's a good advice, and probably a plan on what to do with the money, and also like what to do with the time. Yeah.
Yes.
Well, thank you very much, Eric. That was a pleasure to discuss, and I've learned a lot. How can people?
Yeah, thanks for having me.
How can people find you? How can people reach out to you?
Yeah, sure. So they can find us at just appbusinessbrokers.com. And I'm just it's Eric, ERIC at appbusinessbrokers.com for email. So.
All right. Thank you, Eric. Have a good day.
Thanks, Michael.
Domain Magnate is a leader in buying and selling online businesses with a proven track record of expertise gained from over 300 deals since 2004. To learn more about how we can help you acquire or exit a profitable online business today, head over to domainmagnate.com for more details.